I don't know if you're all doing well. Apologies there was no video yesterday. It was just the last day of work and it was kind of one of those days where it was kind of a sit back, have a kind of chill night because it's been an absolutely mad year. But anyway, back on to the videos today. And yeah, we had some big moves last night when these earnings were coming out. And today we're going to talk about some of those earnings and what it means for a couple of stocks. And also the one that really in particular looks like it's shocked a few people. So let's start with Google. Google is currently up 6.3% in pre-market. That's quite a decent sized move for a 1.5 trillion market cap company to move that much. It takes a bit of money coming in. So obviously that's having a really good day, or will have a really good day at the moment. Now the reason why is they came out with earnings. Earnings were absolutely fantastic. They were the best set of earnings we've seen for Google for a while. So if you look here, EPS was a really good beat. Revenue as well, 7% growth. We've not seen this higher percentage growth for a while from Google. So starting to see that growth coming back. And that was a beat by nearly 2 billion as well, which was really good. Now, actually, when you look into the accounts, obviously you associate Google with advertising. Advertising wasn't actually that much of a big driver in this recent report. It was better. We moved into the positive direction, but it wasn't the main driver of why these earnings were so good. If you look here, YouTube ads did move back into a positive direction. And I think that's really important to say, and Google search and advertising in general did move back into a positive direction. And it is important to say, like, it's good to see it move back into a bit of a positive direction. But the big thing is, like, that's a major part of Google's platform. And that's still, that's not at its peak yet. When we get probably a year's time, 12 months time, we might start to see Google back at the levels that it used to do. But we're not at the moment. So that's exciting that we've still really got the advertising part of the business to come back. The big thing that was really driving Google forward in this quarter was cloud growth. Cloud growth, once again, absolutely rapid amounts from the cloud growth. And even though this is a small part of the business, this was, I actually remember when Google dropped a fair bit and people talk about, the effect on advertising. And someone actually said, and it was one of the really big YouTubers, they went, Google Cloud is not really worth talking about. And I was like, what? Like, this is going to be one of the big growth drivers for the company, more and more going forward. And also, if you ever look at Amazon, what's the big thing for Amazon that drives up the profitability for Amazon? It's Amazon Web Services. So not only is this now going to be probably one of the fastest growing parts of the business and try and make up for some of the growth that it's lacking at the moment, but also it's going to generate so much on the bottom line as well. And that's what happened. So I mean, it was good to see advertising come back into a bit of a positive, good, or back into the right direction, and that still has a lot of room to come back. But also, you're talking about the cloud as well, still growing at good rates and pushing the growth forward. But also, Google Services as well, I think is worth pointing out as well. That was strong as well. So yeah, that was obviously really good. But the big thing is, like, when you look at the operating income, if you look here, so Google Services, good growth there. Other bets weren't losing as much money as what they were doing previously, but look at the cloud as well. You're talking a big swing on the Google Cloud, and that went from what was a loss a year ago to now making profitability, and will continue to make a lot of profitability as well. And that's making a major difference on there. And as that gets bigger and bigger and bigger, if that carries on growing like 20-30% a year, that's going to push more and more growth for Google going forward. And that was obviously really good. And then I looked at pre-market and I thought, I wonder if Google's kind of giving a lift to the whole market right now. And I looked and I was like, oh no, like the futures are pretty much down. And like, I thought we would see the market get a little bit excited on them Google earnings, but it's not. And then I thought, oh well, to be fair, the big thing that's going to be happening in a few hours time, probably around about when you're seeing this video, is the Fed. The Fed are going to be setting out their interest rates. And as we talked about on not yesterday's, the days before video, everyone's expecting a 25 basis points hike, so we'll see if that comes through. But the big thing is that the market probably will be kind of sat back waiting. There won't be much reaction until Jerome Powell talks, and I think we'll get the normal scripts that comes out of Jerome Powell, which is like, well, we're going to give ourselves a lot of room to, maybe put that interest rates up a little bit more. And the market's going to probably turn around and go, oh, same old, nothing to get excited about. And then we'll probably take a little bit of a dive off Jerome Powell after he's finished talking. I think that's what we'll probably see once again. But we'll talk about that a little bit more in a little bit. Now, the number one that brought out earnings was Snapchat. Snapchat was down 18.5%. Now, Snapchat, we talked about this on 2 days ago, is that Snapchat is one of the most volatile stocks when it comes to earnings. Historically, it's one of the most volatile, and once again, as we said, it's moving in the wrong direction. And the difference between Google and Snapchat is Google has these other parts of the businesses. It's not relying on just advertising, where Snapchat is mainly really advertising. And what have we seen? Advertising is weak. We saw that with Google. Advertising is still not great. Snapchat, a pure like advertising play, is getting crushed, and it's clear that there's still a lot of pressure in the advertising space at the moment that is affecting companies. And when you look at Snapchat, they came out with negative 3.6% year-over-year growth. Operating losses as well, basically the same. And also it changed its revenue guides as well, which it downgraded, and that was the combination of it moving so much. So you can see here Google got a lot of respect and shot the market because it is showing it's a bit more of a resilient kind of business. And I always say, like, for me, you know, Google was one. I tried to make Google my biggest position in the portfolio when this was dipping. It's a fantastic company. It's such a really good company that you only get these like dips in Google every like 3, 4, 5 years. And when these dips come, you've got to buy them. And Google, that was Google, and I was trying to buy that dip on Google. Big time, big time. Same with PayPal, big time, big time. And for Google now, it looks like that opportunity is probably gone for the next kind of 3 or 4 years. And I'm happy that I always say when these big gems, these big dogs in the stock market ever go on sale, you got to be buying them up because you only get a short time to buy them. And obviously, you know, Google is now getting that respect back on the company name. Snapchat, obviously, that's an advertising company that's been hit, which gives me confidence because originally when I saw Google's earnings, I was like, hold on, are they saying that advertising is getting strong? And I was a bit worried for the likes of S4 Capital. And then obviously it was showing other parts of the company were resilient. Saw Snapchat earnings, I was like, yep, advertising is still very weak. And then I was looking at Snapchat's numbers, and I was looking at the guidance they're giving, and I was like, actually that guidance that S4 Capital, or the profit warning they actually did the other day, doesn't look that too bad in the context now. But however, Snapchat is clearly pulling down S4 Capital today after their earnings. But I would think S4 Capital should be up today because you'd look at their profit warning and it's not as bad as what Snapchat did. And it would also be a point of like, well, they're an advertising company and they're struggling, so it makes sense that S4 Capital is struggling. That was a bit of a surprise to me today. And that leads me on to Meta. Meta is actually up off Google's earnings, and I was a bit surprised. Obviously, they're going to be reporting their earnings tonight, but I was really surprised to see Meta up off Google's earnings because, like, well, Meta's slightly different. You know, it's not more of a resilient business than what Google is. It's a lot more focused on advertising. So this company is going to get hurt more of a Snapchat kind of numbers, in my opinion. And then I looked at what analysts are forecasting, and I'm sure these have changed from the day ago because I looked at numbers a few days ago, and I was like, they're well hard numbers for Meta to hit. But now I've looked again and I was like, oh, these are better. You know, negative 3% sales growth. EPS is expected to move back from a year ago of 246 to 262. Obviously, that will be the job cuts kind of kicking in. And I actually looked at these numbers and thought, they're actually not that bad. Like, Meta could probably hit these numbers tonight. I would expect them to get, 3%. Negative 3% growth in EPS going up after the job cuts. I think guidance is key. Obviously, the forecast is to start moving back up to revenue growth, which, judging by Snapchat's forecast and S4 Capital's, I don't know. But I was a bit like, I would expect Meta to be more getting pulled down as it normally does from Snapchat rather than reacting positively to Google's earnings because there's a pure advertising play. I'm looking at Snapchat, I'm looking at S4 Capital, and Meta is a lot more heavy on advertising. I was a bit like, we'll see what happens tonight. I think this is going to move a little bit, and if I was a betting man, I would probably say it goes down. But Meta is suddenly come from the least favorite company on Wall Street to the most favorite company on Wall Street. So you never know. It could end up being an average report, but yet the market, because it's in love with Meta at the moment, takes it up. But we'll see what happens anyway. And last one I want to mention is there's another company that's reporting tonight that I'm going to be watching because I want to see what they're saying. I wonder if they're going to give like a Nvidia type guidance from their last quarter where they went, yeah, AI is giving us a massive boom, and like the guidance gets massively shoved up. I'm looking and seeing what these guys are going to do because Mattel, they're going to be bringing out their earnings. And obviously, as you guys know, Mattel are the owners of Barbie. And this is how mad it is at the moment. In case you haven't seen, there's a Barbie movie out, and it's mad. Everyone's going mad about it. And even I went on Google and I was just searching Barbie on Google, and they've even gone all pink on the Barbie screen on Google page. And before it stopped now, but when you type in Barbie on Google, there was all these sparkly things coming up as well. The world has gone mad for Barbie at the moment, and I was even surprised to see like Barbie's even smashing Oppenheimer at the box office as well. Everyone's gone mad for it, and I was looking, thinking, this is a company that struggled for the last few years. If we zoom out a bit further on the past performance, really since Toys R Us started going bankrupt, they've really suffered. Obviously, they've not had the major stores to kind of sell out of, and that's led to the revenue declining, profitability being a bit unstable now. But maybe it's kind of bottom there. If you are bringing out these movies, if you are bringing out a Barbie movie every kind of 3 years, then surely the toys are going to go back absolutely crazy, and the revenue growth will start going back, the profit will start going back, the licensing they're going to do on it. This could be the movie itself, the Barbie movie itself, can probably last or do the sales for Mattel for the next kind of 2-3 years, and then if you refresh it out with a new one, you do a spin-off about a certain character. I think that this could potentially be a game changer for Mattel, from where they've been in such a horrible place since Toys R Us had gone bust, that now they do very well from the Barbie movie. So I'm staring at this now thinking that this could be a big opportunity in the coming next couple of years. Right now I looked at it, I think it's not too badly valued, but then if you start coming out with, they're only expecting on these forecasts 2-3% revenue growth. I was looking at this going, surely you're not going to have 2 or 3% revenue growth when you've just brought out this major movie that everyone's going crazy about. Surely the toys are going to be flying off the shelf and licensing are going to be coming absolutely crazy. So I'm staring at this one tonight because I think this could be an interesting one anyway. So I hope you enjoyed the video, and if you could hit the like button, that's absolutely amazing, and I'll see you all in a bit.